Good morning, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern U.S. time on Thursday, the 9th of March 2017. Thanks for joining me on another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. It's been a bit of a hectic morning this morning. Um, but I'll try to keep this as short as possible. The first thing you should know is that I'll be quoting June prices officially, the U.S. indices. That includes ES, NQ, YM, TFS, or TF, the Russell, EMD, you name it, is trading June 2017 officially, even though the volume is still in the March contract. Some people choose to stay in the March until the volume is higher in the June. Some people switch with the exchange. I'm one of the people who switches with the exchange. The product is liquid enough that it doesn't make an iota of a difference to me. Besides, it keeps things simple for me because all my charts roll over with the official roll at 8:30 a.m. Central Time today. And so all my studies and everything is shifted to June going forward. So not to confuse you, I'll be quoting June this morning. Okay, so just keep that in mind. As far as the market sentiment, pretty much everything is lower this morning. The U.S. equity products are pretty much unchanged. The S&P is down only 2 ticks. The Nasdaq down 2.5 points. The Dow down 9 points. So far, the only thing that's up is the euro, and the Euro Stocks 50 just went unchanged at 33.94. The DAX is down just to 28.5 points. That's about 23 basis points. Crude oil is really taking it in the throat here. Just absolutely trending away. I've talked about crude oil earlier this week and said that it's in this extreme balance situation. It has been stuck there for a long time. Balance leads to imbalance, and this is your imbalance, folks. The crude oil chart just looks pretty deadly. It's trading at 49.56 and has gone down to about 49.49 since the 8 a.m. open this morning in the last 4 minutes. So very volatile action there. The treasuries are down. Remember, the ECB's president, Draghi, has been commenting. The ECB released has made its release this morning at 6:45, and it has left its main 7-day refi rate unchanged at 0%. Left the deposit facility rate unchanged at negative 0.4%. Leaves marginal lending facility unchanged at 0.25%. It affirms asset purchase target of 60 billion euros effective April until December 2017. And then you just got to pay attention to the comments. Also, this morning, we got initial jobless claims, 243,000 versus 238 expected. This is worse. Continuing claims, 2.06 versus 2.06 in line. And then we got U.S. February import price index at 0.2 versus 0.1 estimated. Year on year on import prices, 4.6 versus 4.4. The staff projections also came in from the ECB. It raises 2017 growth from 1.7 to 1.8, raises 2018 growth from 1.6 to 1.7. Those are important. Other than that, really, it's a whole lot of noise from our wonderful government here in the U.S. and not much to report there. As far as what we've got left for today here, we have EIA natural gas at 10:30 Central, expecting negative 64. And at noon, at 10:30 Eastern, sorry, for natural gas, at noon, we have U.S. household net worth. It's a number that I hadn't seen before for the fourth quarter. And then the deck is clear. Remember, tomorrow is non-farm payrolls and unemployment, so that's a big one. Expect some adjustment into the close today. I'm expecting a lazy trade today, and because today is rollover day, it kicks off the roll into June. And so starting tomorrow and throughout next week, your delta and volume readings are going to be heavily affected by rollover. So you're going to notice uh, a lot of volume coming in as everybody's forced to do a calendar spread or to manually move from one contract to the next. Okay, so that's what's on deck. Let's look at what was on deck yesterday, what was expected yesterday. The primary hypothesis yesterday, the expectation yesterday was for a reversal. I looked at the point of control below from the prior balance area before the gap at 23.6275. I looked at the low at 64.50, and I anticipated, given the small gap up, I anticipated that we would get some support, and then the primary hypothesis is that it is stabilizing, and as soon as the market has stabilized in the past, what has it done? It has found buyers and it has immediately pushed up. And so the primary hypothesis yesterday for a reversal was for a reversal day. That did not happen. So that was wrong. The secondary hypothesis is for to push up a little bit into the 2372 area for value high and the double top from the prior day, find some resistance, roll over, and then push down into the low. And then there's a potential as I draw into this into the point of control. This is actually supposed to be an arrow rather than a smudge. To push into the 23.6250 area as a test, and then look for it to bounce back up into the close into the prior range. Here's what actually happened. By the way, all the flex levels for the NQ and ES have been adjusted for the roll. For those of you who need information about what the roll premiums are, the change in premiums, I posted those on Twitter. Just look for an image on twitter.com/futurestrader71. So here's what we got. We pushed down into the see, it's confusing because what I showed you from yesterday is using March prices. Okay, so what you saw here is using March prices. However, what we're looking at today is June prices. The difference between June and March is 3 points. So that 23, this 23.6275 is now what? It's 23.5975. 23.5975. So everything we looked at here, the top of Hypo 2 was expected to be around 23.72. So now it's 23.69. The point of control, the MC point of control, is now 23.59. So just remember that as we look at what we actually did, because this chart, I could pull up the prior contract chart, but this chart is adjusted for June. So 23.59, this is the point of control right here, around this price here. This is where it is. 23.59 and a quarter. You can see the market pushed up to 23.70 instead of 23.69. So the high was put in. The high was put in sideways. So the high was put in pretty much 4 ticks through the price that was anticipated, which is 23.69 in June. And then the market rolls over, and then we're looking for an impulsive move down after balancing. We finally get that here. If you notice yesterday, the biggest rotations are on the downside all day. So dominance there by the sellers. So as we look at how this is plotting out, you could see that the large rotations, like right there, were to the downside. The biggest rotation up was this one, and then again large rotation down, pullback, beautiful setup near the mid, stopped at the OS low. This was a real tough one here to take. This is a textbook for me, but I did not see good depth support there. The only thing that I had to lean on is the zipper from back here, and then potential for backup risk reinforcement, so to speak, up into this area here. So this was kind of a blind faith scale in type trade. Ultimately, it moved down into the MC point of control, 23.59 and a quarter. And then where do we end up? We end up with a point of control right on top of the old MC. The market's accepting these prices down here. We're currently trading 23.6150. So overall, very methodical. You see how the auction goes back to being much more methodical once we get some selling in here, as the price action has caused a release, and for the rotations to actually take place as it normally does. I don't want to say should. Um, Other than that, carrying over into this morning, we open up against our close. We test the test up was fairly weak into yesterday's range. We got to the LVN from yesterday. That's basically the overnight high, and then we had an impulse down continuation, and we've got a correction now. So the expectation, again, just like we came in yesterday, and the hypo one has not worked. I think it's only worked once this week, or maybe not even once. I don't remember, but hypo one has not been paying off based on how the market is set up. It seems to be more indicating hypo 2. So with that, the overall expectation this morning, let's turn off the flex levels to simplify things here. This looks like a lot of line and a lot of noise on the charts, but I'm simply pulling data from the past and carrying it forward as opposed to marking it individually on the chart. So that's what all these lines are. This morning, the expectation is for the market to, again, open auction, push lower, find support against that MC point of control, and then I expect it to target the high volume node right here, this strong node up here at 23.67 even. That's the expectation for this morning, and then I'm looking for to balance and then finish somewhere near the near where it closed yesterday. That was hypo 1. Remember, non-farm payrolls tomorrow. The expectation is this afternoon. It's likely to be slow, and then we're likely to see something on the close. I'm going to warn you that the close today should not be fought. You don't want to fade or go against the direction of the last 20 minutes of trading, as books are balanced, risk is balanced. Remember, futures are a risk control. It's a hedge product. That was the original intent of it. And so those who have exposure in options that have to hedge their delta and so on are going to dip into futures, because that futures, as you probably already know, is one of the key features of futures is the efficient use of capital through leverage, right? You need very little to hold a lot of notional value or value at market. That's the primary hypothesis. The secondary hypothesis, again, the same thing as yesterday: push up, find its resistance at 67, and then start to move down, close the point of control, pull back, and then start to move again to the prior day's low. I expect that the secondary hypothesis is likely to close somewhere in the 62 to 64 area. That's the second hypothesis for today. Okay, so that's what I have for you. Let's take a look at crude here real quick. This is really an awesome technical move by crude. As you already know, so if I let me extend this balance back to where it belongs. So I'm going to shift this profile right here before your very eyes. Look at how incredibly compressed this profile is. So if we go back to the most recent, there are two balances in crude. There's one that is going way back to September of last year, and then there's this one that has been brewing since December of last year, and it comes to an end here with yesterday. But look at how much. So if I bring this profile forward, oops. Okay, not able to select it. Let me get rid of this other one. All right. So as I bring this profile forward, you'll see that it is really sharp. Here we go. So from the gap back on the 1st of December to this point, look at how balanced this is. There's a ton of volume built into it. It is highly compressed. Remember, the price that was cited was around 53.69, 53.72 is the point of control, and so it's got a ton of energy. It's got 16.2 million contracts in this balance zone alone. Remember, this is a fairly thin product, and it released its energy yesterday, and it released it to the downside. It has tested this point of control again and again and again and again, and has now shifted down. So when you look at yesterday's move, it basically went from 52.87 with the prior day's close staying naked up here at 53.10. It has moved from 52.87 all the way down to $50.05. That's almost a $3 move on a $52 open, 52 and a half dollar open. It's a fairly impulsive move, and then it's continuing. It continued to shift down, and this morning it's having a pullback, but the expectation is it's likely to close lower than where it was yesterday. This morning it's likely to extend this move down. If you pull in the past as far as where it was before, you'll find that there's a balance area right where it is now. It is somewhere around the 49.49 or 49.30 area is the next balance area down here. So crude, it's definitely got the volatility right now. It's likely to continue to have that much. That's all I have for you for this morning. Remember, again, trading June, quoting June going forward. Hopefully, you've gained something from this session as always. And if you have any comments, just send them over through Twitter or on the YouTube video, or just on my website, futurestrader71.com. Take care.